Hello everyone and welcome back again to my YouTube channel. So in this episode of my YouTube videos, I'm going to give you a chart breakdown of the opportunities that presented itself last week. That was on 19th of August to 22nd of August. So I'm going to give you the opportunities that presented itself within that time frame and how you can also learn from those opportunities. So let's move straight to the chart and let me give you a chart breakdown on how you could have taken advantage or how you could have taken advantage of those opportunities. So the first opportunity that presented itself was on Eurocard. So I think I've even done a special video on Eurocard, but let me break it down again. So on Eurocard, it presented itself on 20th of August 2025. So when you move to the chart on Eurocard 20th of August 2025, so this is a trade that I've done a video about it. So on Eurocard 20th of August 2025, so what did I see, or how did the opportunity how did it present itself? So let's move. So first of all, let's move to 20th of, so that was on 19th of August 2025. So let's do a chart replay and see how you could have taken advantage of. So before you analyze the chart, one thing you have to know is what you need to do: top-down analysis. So for me personally, the reason why I mostly do top-down analysis is for me to know what is happening at the higher time frame. It might be support and resistances at the higher time frame. Okay, I don't want to overlook those time frame. Okay, because when you move to the lower time frame, you might enter a trade and you might not know there was a support or a resistance at the higher time frame. So you need to pay attention to all those levels so that you don't get trapped on those levels. Okay, because one thing you need to understand is you don't have to be buying, you don't have to take a straight. It is going to be very dangerous when you are taking a buy on a higher time frame resistance and taking a sell on a higher time frame support level. So the reason why most people get hit is because they don't pay attention to these levels, and anytime price is approaching these levels, what you are going to be seeing is majority of the time it reverses those levels. If it's a resistance, it is going to resist price from moving further. If it is a support, it is going to maintain or support the price from it is going to support price to or it's going to push price to move upwards. So you need to pay attention to this level. So let's move straight to the chart and let me give you a chart breakdown. So first trade was on Eurocard. So on Eurocard, if you move to the monthly time frame, we identify the various reactional levels. So the high time frame, what I mostly do is I identify my various support and resistance levels. So we had a resistance level at this particular point. So because I've already broken down, or because I've already done a chart breakdown on this one, I'm not going to waste a lot of time on this. So if you move to the weekly time frame, on the weekly time frame, so there was another support and resistance. So as I've always been saying, if you're analyzing the chart is like trying to if you are trying to cross a road, you need to watch at your left, you watch your right and see if there's any car coming. Okay, because if you don't pay attention to the cars that are coming, you are going to get hit. Okay, or maybe a car is going to crash you. So it is very, very important. So it's the same thing when it comes to the market too. So in the market, you need to pay attention to those levels, because you might not know the support or a resistance level that is close to the current market price. So if you overlook it, what is going to be happening is you might be stopped out, or price can come to your stop loss. So it's very, very important. So if you are looking left, if you look at our left, there's price action over here. Okay, we need to pay attention to. So let's look at our left and see if there was any close price action. So there was a price action over here. So anytime you are drawing or anytime you are plotting your levels, you change it to a line chart for you to be able to get the opening and the close of price. So if you move to this side, there was an level over here. Okay, so you see we place the level to touch those various levels. There was another level over here. So these are the various levels that we had at the monthly time frame. You get it? These are the various levels we had at the monthly time frame. So let's move to the daily time frame. So if you get to the daily time frame, okay, so on 19, this candle wasn't here. So on 19, price has just made highs and lows. It just pulled back over here, and there was current resistance or current support levels over here. So as I said, you need to look left. You get it? You need to look left. So there was this current support level over here. So for me to get the accurate level, what I will be doing is I will change the candle chart to a line chart for me to get the opening and the close of price. So I'll change it to a line chart. If you change it to a line chart, there was a support level over here. So at the daily time frame, I change the colors of the line so that I will not get confused when I move to the lower time frame. I will easily get to understand the level that I got those levels from. So these are the things that I will do. So one thing you need to understand is when it comes to the daily time frame, I check the trend. So we have to read price. Okay, so those who don't understand how to read price, you better join the mentorship. It's very, very important. If you don't know how to read price, it's going to you are always going to be at the wrong side of the market. And if you are at the wrong side of the market, what is going to happen to you is you are going to lose money. That's what mostly happens. If the institutions, the big corporations are buying and you are also selling, one thing you need to understand is these big corporations and big institutions are pumping huge cash or huge volume in the market. So if you are trading against them, the chances that your $10 you are trading on your $100 account, your $10 account, you are going to be crushed by these big corporations, big institutions, the government, the financial institutions. So it's very, very important. So when you move to the daily time frame, you notice that price was an uptrend. At this point, this is where price shifted the trend. So price is currently doing highs and lows. So price, the trend at this point is an uptrend. So what I have to be doing is I have to be looking for a sell at a reactional level, at a higher time frame reactional level. Okay, so the reactional levels are the various support and resistance level. So the higher time frame trend is an uptrend. So if you apply the trend line, you get to understand that the trend is an uptrend at this point. So let's move to the H4 time frame. So when you get to the H4 time frame, you are going to check the trend. So if you get a trend, or if you get a market condition where the daily time frame and the H4 time frame aligns with each other, what is mostly going to happen is the chances that price is going to move in your favor if you are following the trend of these time frames is very high. So it's always important to find a market where the daily H4 are in the same direction. It gives you a greater advantage, or it gives you an edge. Okay, it gives you an edge. Your confluence becomes very strong, or your confirmation becomes very strong. So let's look at now you are aware that the daily time frame trend is an uptrend. So moving to the H4 time frame, you get to understand that the H4 time frame too is high. It's making higher highs and higher lows. So what are you expecting? Price is currently sitting on this strong area of interest which we had at the daily time frame. So what am I expecting is price is going to head to the next zone. Okay, so the next zone is at the daily time frame. Okay, there's a daily time frame zone over here, but when you look carefully at the H4 time frame, you get to understand that we had a reactional levels at the H4 time frame. So if you come to the H4 time frame, there's another reactional level over here. One thing you need to understand is if price is moving, as I told you, it is going to look left. So the immediate swing, or the immediate the swing is this downtrend over here. So price is going, if it is moving, it is going to watch left and see if there's any support or resistance. So the nearest support or resistance is at this point. So this point is going to be our trade target. You get it? So this trade that you are taking, our target is going to be at this point. So now you are left with how you are going to be taking the entry. So if you want to take an entry, that is when you move to the lower time frame. Okay, so let's see. So this, you have to when it comes to the entries, as I've always been saying, we check the trend, we check the time of the day, we check the day, we check the upcoming news event. So looking at this trade, let's check the time here. Currently, I mostly, when it comes to currencies, I trade at the London session and the New York session. So when it comes to the London session, I start trading 6 o'clock a.m. GMT. Okay, so let's fast forward price and see what's going to happen. Okay, so this is the 1 a.m. GMT candle. So it's going to run to 5 a.m. So which we are about to approach the London session. So this is pre-London session. So we had another support level over here. You get it? If you change it to line chart, you see the turning point very well. So we had a turning point over here. Okay, so price is having room to move up to this this side. There's a room for price to move to fill the whole of this zone. You get it? So this is the zone that you are going to take advantage of. So let's move to the H1 time frame and see if you are going to get a trade So let's move to lower time frame, like the 30 minutes. So when it comes to the 6 a.m. GMT candle, so this is what pre-lending session. So let's fast forward price and see where there was going to be an opportunity. So price keeps on moving up. We are not bothered. Okay, so currently price has pulled back when the lending session is about, when active lending session is about, or the main lending session is about to take place. So let's see. So this is where the first trade was taken on Eurocard. Okay, so this is where the first trade was taken on Eurocard. So price is currently price has created a candle, a bullish candle. So this bullish candle signals that price is about to head off to or take off to the next level. Okay, the reason is candles are used for confirmations. Candles are language. It speaks something. It tells us something that you need to understand when it comes to candle. How to understand price is going to move up or down. Apart from using fundamentals, candles are what we use to read price. Okay, the historical data is what we use to read price. So what a candle at this point is telling us is price is about to head off. You get it? Because reading this candle carefully, you notice that there was a long lower wick and there was a short upper wick. This lower wick tells you that sellers have lost control and buyers are having control in the market. Looking at the upper wick, it tells you that at a certain point buyers lost control, but sellers drove price to this level. You get it? And now buyers are in control. Buyers drove price up to this level. You get it? So at this point, this is where we are targeting price to head to at the higher time frame. So what you are going to do is you are going to fast forward price and see what's going to. So at this point you were in profit and price kept on moving high. So at this point there was 1 to 3 risk reward, but price finally got to the target. So this was the first trade I took on Tuesday. Monday I didn't get a trade. Monday the trade I wanted to take was on USD card, but USD card moved before me, so I couldn't take advantage of that move. Okay, so the next trade was taken on, I think on Wednesday, which was on Wednesday trade was on GBP JPY, which was a breakout trade. So let's move to 20th of August 2025. So on 20th of August 2025, that was when a breakout, I think there was an opportunity on BTC2 as well, and there was an opportunity too on GBP JPY2 as well. So let's first of all, since I'm mostly active trading currencies, let's talk about the currencies first. So moving to the currencies on 20th of August 2025, where the trade presented itself on GBP JPY. So let's fast forward price to 20th of August. So this is 19th. So let's fast forward price to 20th of August. Yeah. So this is where the trade presented itself. Okay, so first of all, let's do our top-down analysis. So for us to do our top-down analysis, you move to the higher time frame. I mostly move to my higher time frame, which is the monthly time frame. So these are the various reactional levels. If you change it to a line chart, you understand that there was a reactional level over here at the monthly time frame. Okay, there was a reactional level. How did I get this reactional level? Price currently was doing higher lows and higher highs, higher lows. It made higher high, it made higher low. Okay, or currently it's made lower low, it's made lower high, it's made lower low. So if price is moving, it is going to move to this side. So as price is going to move to the next zone, so there was another reactional level. The reason why I'm not plotting this reactional level is price is currently not close to this area of interest. Price is currently close to this one. So if price is moving, it's going to move to this side, and if it breaks out and it is pulling back, it's going to pull back to this level, or it's going to pull back to this level, or it's going to pull back to this level. So the final place or the final area that is going to invalidate the trend is when it has broken this one. When it breaks this one, the trend has currently shifted towards a downtrend. So that is why I've plotted this bar. For people not to get confused, let me bring this one too. So there was another reactional level over here. There was another reactional level too at this point. You get it? Yeah, so moving to the weekly time frame. That is at the weekly time frame, let's bring out the various levels that we had on 20th of August 2025. So there was another reactional level at this point. You get it? So if price has broken this one, we were expecting it to come to this level, but this one has broken. So currently this is the current level. That's what price is supposed to test, then come back. You get it? Yeah. So let's move to the daily time frame. So getting to the daily time frame, at the daily time frame, the current market price, the current levels are at this level. There was another level over here. At the daily time frame, there was another level over there. You get it? So as price has broken out from this zone, we are expecting a pullback to either to this zone. Okay, you're expecting a pullback to that zone. So you were expecting a pullback to this zone at the daily time frame. You get it? But price, the candle has currently broken this one. So this was the daily time frame. So before that, this one was not there at the daily time frame. You get? So as price has broken, you're expecting it to pull back to this level. You get it? You're expecting it to pull back. So let's get the level correct so that we don't miss out anything when you move to the H4 time frame. So moving to the H4 time frame, price is currently what? So we are going to fast forward price to, there was another key level over here, but let's first of all fast forward price. So if you fast forward price to, for us to get to 20th, okay, so this was the 20th, this was the Asian session candle. Okay, this was Asian session candle. So we had a zone over here at the H4 time frame, because if price is coming down, it's going to come down to what? The next reactional level. There was another reactional level over here. So let's fast forward price and see what happened. Okay, so this is where the trade was taken. So you will notice that the trend at the H4 time frame is a downtrend. Price is currently making lower lows, lower high, lower lows, lower high, lower lows. It's made higher high, looking like it is an uptrend. Okay, shifted it to an uptrend, and currently price just broke this one to what? A downtrend. So at this point, the trend is what? A downtrend. So how did I take advantage? Because if you look at this zone, there was a clean zone over here for price to fill. So the reason why I ignored it, most often I check the zone. If the zone is not big, I'm not going to take the trade. But the reason why I took this trade was because what? I took the trade because we were in volume time, and when we are in volume time, what happens most often is what? You see big candles, there's volume, as in price mostly moves rapidly. So that's why I took advantage. So I moved to the lower time frame, okay, which is what? The 30 minutes. Mostly I take my entries on 30 minutes. So I have to go for what? I have to wait for price to what? Pull back to this level, then I'll take the continuation of the trend to fill this one. So if you move to the lower time frame, you get to understand that it's a big zone. Okay, so you have to first of all measure the pip range. The pip range is 23 pips, which is not bad. So let's see how I took advantage. So price pulled back. Okay, so this was at the H1 time frame. I think the entry was taken at the M30 time frame. So I moved to the M30 time frame. Yeah, so I'm waiting for price to pull back, then I'll take the continuation of the trend. So let's see what happened. So this is where price pulled back. You see price has currently broken, pulled back over here. So I took an impulsive trade. The moment price broke the lows of this one, I took an impulsive trade. So my stop loss was beneath the candle, targeting this level. But mostly I target 1 to 2 risks to reward. Okay, I target. So when price gets to this level, I'm going to bring my stop loss, okay, to an entry level. That's what you call break even. I'm going to bring my stop loss to an entry level. So let's see how the trade was taken. The moment it broke this one, I'm in the trade, and you see the trade even moved more than 1 to 2 risks to reward. You get it? And it got to like 1 to 3 or so, 1 to 5 risks to reward, which is massive. You get it? Which was a massive trade. Okay, it was a massive trade. Yeah, so that is how the Wednesday trade was taken. And the next trade was, yeah, that was the next trade. Thursday there was no trade, the market was consolidating. So I didn't get any opportunity. So the next trade was taken on, I think Friday. There was an opportunity before, during the New York Stock Exchange session. There was an opportunity, a breakout opportunity over here, but because of the news event, I didn't take the trade because there was an upcoming news event. There was a breakout trade. There was a breakout trade at what, Friday, but because of the news. So you see this big candle. This big candle was what, a news event. There was FOMC meeting, so that is why we saw this huge candle over here. FOMC, mostly they declare, or mostly give a clue on how the interest rates is, how they are going to the interest rate is going to be, either to cut rates or what. So it's very important investors pay attention to such data. You get it? Investors mostly pay attention to such data. So the most important trades that were taken was on USD card and what, Euro card, and the next trade was on GBP JPY, and BTC2 also presented an opportunity, but because I don't take those trades, so I'm not going to break it down. So basically these are the opportunities that presented itself. So let's break down BTC USD, what I saw on 20th, what I saw before. So the trade was over here, so you can see I've done some markup over here. So this is where, I think this was 20th. So this is where the trade presented itself. Okay, so you notice that, let's do a top-down analysis. So price was what, in an uptrend. Price was in an uptrend over here, so there was a reactional level over here. So moving to the weekly time frame, there was another reactional level too. At this point, there was another reactional level too. At this point, so when you move to the daily time frame, at the daily time frame, price has broken over this one. So there was another reactional level too over here. Okay, so the reason why these reactional levels are the levels that when price is approaching them, it is going to it's a battle area. So anytime price get there, we are going to get breakouts or a pullback. So I mostly pay attention to those levels so that I don't get confused on them. You get it? So that I don't get confused. So on 20th, so this was the 20th trade. So price has broken out. Price was in a downtrend. If you read the trend, price was currently in a downtrend, pulled back over here. You get the price was in a downtrend, pulled back over here, created this resistance. What are you expecting? A continuation of the trend. You get it? You're expecting a continuation of the trend. So when price looks like this, we can take a trade over here, but our stop loss is going to be very wide unless we place it over here below the previous candle tip, which is going to be very wide. So what you are going to be doing is you have to move to the lower time frame to take the trade. You get it? So at this point it has broken. You need to wait for a pullback. Okay, let's look at the time. I think the trade was during the I think the setup was even spot. Okay, there was an opportunity before this candle moved. There was an opportunity over here. So this is where the trade was taken. This was the trade. First, this was the trade. You get it? So you get to understand this was this was close to the New York Stock Exchange session. So price just broke out over here. So you're expecting price to come to this level. That was what I was expecting. So what I would do is the moment this candle got broken, so this one I moved to the 15-minute time frame. The moment this candle was broken, the entry was taken over here. The stop was placed below this one, targeting the next H4 zone. But what happened is price never got to that level, so it just came back. It just came back. But I knew how volatile this pair was. So the moment it got to, I think 1 to 2, I took profits. You get it? I took profit over here. So that was the trade. The idea was taken from the H4 time frame, moved to the lower time frame, which was the 15-minute time frame, and what the trade was taken, thinking price is going to fill the zone, but it got to 1 to 2 and the trade was taken. Yeah, so I know someone is going to learn a valuable lesson from this one. So if I've learned, or if I've gotten something from this video, kindly subscribe to the channel, give a like to the video too. And if you want to learn more from me too, you can kindly check the description section, and you see my details over there. You chat me and we talk about how you can join my mentorship program. See you all same time next time. Bye bye to everyone.